Good morning, everyone. Welcome to our Friday morning trading session. Markets just opened a moment ago, and we'll take a look here, see what's going on. This is with the NASDAQ. Let's take a look at the overnight here. We'll do it on the Raptor. See where we've been. So looks like it was a fairly active overnight session. The market closed right here around 46.95, 96. The Asian session a little bit quiet, and then look at that. Actually, it was pretty quiet for most of the London session until about an hour before the open this morning. Big run down, big run up, and a big run down again, and a big run up. So we're all over the map here this morning. We'll give them a few minutes for the dust to settle. Yeah, it's the jobs report, isn't it? I'm just checking the reports this morning. Well, that's good. That's good news. Well, you don't, I don't know about you guys. I don't trust the news like I used to. It seems it can throw a little bit of a spin on just about anything. So yes, it was the non-farm payroll or employment change. That's always a biggie. Yeah, gold took, Mark says gold took a pretty good dip to the downside this morning. Yeah, a huge move. For those of you living on the East Coast or who are early risers, or actually gold is a very good 24-hour market. It's popular in all time frames. So regardless of where you live, gold is a pretty good market to trade. So it opened at 5:20 my time, and all this just developed. You look at the time counter down here. This just flashed across your screen. So here was the signal, or pardon me, here was the open, got a green bar sell, and then the market just came unglued and a huge move lower, all within the span of about a minute or two. Those are the really fun moves to catch. Not so fun when you're on the wrong side of one of those. Yeah, really crazy. It's, well, gold can be volatile. You don't usually see moves that wild in gold. It tends to be, for the most part, it tends to be a little bit more stable. Crude oil, on the other hand, that was reminiscent of what crude oil used to be like. Good morning, Jim. We've got some very lopsided advanced decline numbers here this morning. Jim says we've only got about 560 on the buy and over 2,000 on the sell. So we'll see how that translates. Looks like we did get a little bit of a run up here to start, and it appears as though the market did fill that opening gap. So where did we open? We opened right about here, and there was a little itty bitty opening gap from where the market closed at around 46.96. Now we're getting a red bar buy. It looks like we're going to test our extreme. You know what? I might give this a go on the failure. Right now, the market's still very bullish. So look at that, a very good test of the extreme there. Oh, there they go. All right. So if they are going to head lower today, they're not ready to do it just yet. Crude oil on the hawk looks like they're putting in a little bit of a bottom. We're getting a green bar sell, so you can see here the market kind of stuck in a little bit of a range. The green bar sell, of course, one of these signals that you can trade either way, right? So sometimes I'm just more comfortable taking the counter trend of it. Can I cover it there? No, I can't. So you could look for a little bit of a move higher. We don't have the complete signal just yet. We just have the warning dot at the moment. But I'm looking at the Eagle and the Falcon, and the Eagle's hard edge is here around 45.20. So I'm thinking perhaps a retracement to the hard edge. The green dot signal has since disappeared. So we'll either have to wait for a first micro macro cross or a trend change signal on the Falcon. See if we get either of those. Oh, thanks, Jim. Jim says the bank index still very bullish. All right, here we go with yet another red bar buy. Now, again, I'll set up to short. This is the opposite of the green bar sell. And sometimes, like I say, I'm just a little bit more comfortable trying to sell the failure of this. And these tend to only develop near the end of a trend. So if you're starting to see red bar buy signals, you might anticipate that the trend is weakening and perhaps going to turn over a little bit. Of course, there's no harm in placing an order here that doesn't get filled. And we usually just want to get filled. Well, usually we only want to get filled if the market is going to carry some momentum with it. Okay, in spite of gold's earlier move lower, we are getting some bullish signals here on the hawk. Now we're getting a first micro macro cross higher. The falcon is giving us a trend change signal, and the eagle is also producing a rule of three style signal. So you can see we're at the top end of this trading range. And I certainly do not expect gold to put in a significant rally after the huge move lower. But it does seem as though this high is fairly well defined. You could also shoot a little trend line below here. See if you get some support perhaps off of a macro pullback. All right, we'll put that away for the moment. And we can cancel this also. Okay, we're back near this 4,700 area, which we know was pretty significant yesterday. While we're waiting for that, I'll show you gold here on the Eagle, and you can see how we're producing this rule of three type signal. The rule of three is when we get three signals against the dominant band. So the band is bearish, and we've produced one signal. Here's signal number two. The all-important thing with the rule of three, however, is this test to the extreme. So we don't necessarily need three signals. We can buy the market off of two signals, but this test of the extreme, very, very important. You don't take a rule of three signal without first seeing some sort of test or retest of the lows and a failure. Because the rule of three is also a counter trend signal, you can also treat it like an early warning, very similar to the red bar buy and the green bar sell. All right, so here we go again. We have a fairly well-established range. with the market trading right in the middle of it. Getting now our first micro-macro cross signal. And I'm going to use that 4,700 area to cover the position. Oh, darn. Now we're into yellow bars. Now we're into a green bar sell. No, now we're into yellow bars again. Possible trend change signal developing here on the Falcon. Oh, well done, Jim. Jim managed a decent little scalp there on the YM, picking up 24 ticks. Well done. Okay, so here's our trend change signal now on the Falcon. Notice there was a lot of activity on that particular bar. Not so much resistance against prices going lower, at least not on this bar here. We've just got the warning dot at the moment. I'm going to anticipate that the hash mark's going to print right here. I'll cover it on the other side of 47. And we'll see whether we get a breakdown here. The market relatively content to trade, you know, right around this 46, 94, 95 area. All right, signal not developed just yet. All right, here they come again. What I'll do is I'll just anticipate the hash mark, and hopefully I'll get it. Okay, good, I got the hash mark. Pardon me. Okay, you guys, don't stop now. Here we go. Now that we're below the median line, I would anticipate a move here to 46.83, 84, get down here to the primary. Okay, we've hit the break-even trigger, and come on, a couple more ticks. can do it. There you go. Come on. And they're just sitting there. There we go. Oh my goodness, that was hard work. We did get a comparable signal here on the Hawk. You can see we had our first micro-macro cross. And I hope you can see that this one is of a higher probability because we've had our test of the extreme. You know, we've had the market go up and fail. We had to wait for it a little bit, but no problem finding our profit objective. And here on the Eagle, we have a rule of three style signal again. This time we only have two signals, counter trend. We do have the test of the extreme. No guarantees that this will fall straight off, however. With the Eagle, especially if you take a rule of three off of only two signals, you should anticipate, you know, a little bit of a hiccup here, maybe a retest, and then that third signal. That's why I say these rule of three style signals you can always use as an early warning. You don't necessarily need to take them immediately, although it looks like this one's working out very well. And last but not least, let's go take a look here at the Raptor. And the Raptor, again, giving us this rule of three type signal. So that would be borrowed from the Eagle. So we've got the failure, we've got our counter trend signal. If you didn't get that one, the Eagle also, pardon me, the Raptor also produced a cloud crossover signal right here. So when the clouds cross over, if you happen to be running a double cloud, but even if you don't, the cloud you can see crossed over from bullish to bearish, there's our first with trend signal. And we do anticipate those signals to be higher probability. Here's another one to the upside right there. And you can see that had pretty decent follow through. This is a good exercise to do for yourself. Go through your chart, take a look at where the clouds cross over, take a look at that signal that generates, see what kind of follow through you get and how much heat you have to ride through in order to get a little bit of a bigger move. That'll give you a good indication of how this trade is going to develop. Here's another one. This one actually developed very, very quickly. But here too, we also had that test of the extreme, right? We had several tests of the extreme suggesting that the market, in fact, was getting ready to make a little bit of a move higher. Like I say, good exercise. It'll give you some confidence in your tools. A textbook rule of three right here for the Raptor. 1, 2, 3 signals against the dominant band. Cloud crosses over and down she goes. It's also useful to identify the chop. See, when you get all these yellow bars here, how you don't necessarily want to be taking those signals just because the clouds cross over. If you're in an area of defined choppiness, you want to let that market get outside of that range. So here's your range. Let the market get outside, retest. So there's the test, the breakout. Here's the retest, and show you that it can actually recover before you get into buying the market. Why is that? Well, because you could get one of these type scenarios where they're not truly ready to head higher, and they give you that false breakout. So it looks like our Eagle trade would have found its profit objective. Our Falcon trade, oh yeah, down here, no problem hitting the 46.84 target. Gold getting ready again. Oh, just missed a macro pullback signal on gold here with the hawk. Hazards of being a trading room moderator. You get explaining stuff. So nice little move higher there for gold. Again, the higher swing lows, the higher swing highs, you're producing a buy signal near the lows. This is something that should be attractive to you. Your eye should be drawn to this, and you should be thinking, yeah, that's a high probability signal right there. Versus had the signal developed up here. Let's say we're going to produce a signal up here. This one would not be quite as attractive. Why? Well, because we know the support, or the market is finding support down here somewhere. Right, so if we happen to buy in up here, there is no signal, but we're just pretending. If we did happen to buy in up here, we may have to endure a whole lot of heat. And I apologize, I made that mistake last week. I'm going to endeavor to be a little bit more choosy with my trades so that I don't confuse people as much. I got a few emails from folks saying, why did you do that? Well, you know, sometimes if nothing's going on in the market, we get a little bit bored and I show you something. I'll try not to do that. Oh, well done, Mark. Mark's in the rule of 3 trade here on gold. Way to go, Mark. So 1, 2, 3 signals against the hard edge. We do have that test to the extreme. Every reason to expect the market to go a little bit higher. Here the cloud has crossed over also. So just like the Raptor, we anticipate the cloud is going to produce some sort of support if in fact the market pulls back a little bit here, which it is likely to do. Again, you can find this out for yourself. If you look at your cloud crossovers, just go back in the history of your chart. Market makes a move. There's typically some sort of little retracement sooner or later. You know, cloud, even a little crossover here, cloud crosses over a little bit of a retracement, hard edge bounce, produces your trend change signal, and down you go. So it looks like they're feeling a little bit of resistance here near these 1090, 1091 zone. But it looks like there may be a little bit of profit taking going on in gold this morning. All right, so here we are with the NQ now. Appears that the market is going to be in a little bit of a downtrend today. And it looks like I should have maybe left a runner in play on that one. Yes, thank you, Jim. Jim's pointing out, he says the YM is sitting on the 10 a.m. low. So is the NQ. What's significant about this, you ask? Well, very often the first half hour of trading, otherwise known as opening range, kind of sets the parameters for the day. So if you find yourself taking a signal at the top of the hour, you may want to dial back the risk a little bit because it can turn into a fake breakout. Look at how the buyers are just, the buyers were chewing through the orders there. Okay, we'll try not to do anything silly. come down a long ways. You know, a move here back to the hard edge, I don't think that would be unreasonable, 46.90. So if you are shorting somewhere through here, you may have to keep a slightly deeper stop. Look at here on the Falcon, a lot of green dots, a triple dot there. And here on the Geiger counter, look at that selling that got absorbed right near the lows. Okay, we got a 3-arrow consolidation here and a trend line touch signal on the Falcon. All right, I'm going to consider this, but not until we get below the low. And where am I going to cover this? Well, I said 46.90. Yeah, it's a little bit more money than I'd like to have at play. I should actually cover above the, oops, come on. Oh, darn it. It's going to run on me now. I was going to cover above the median line. Oh, can't afford that. Okay, so we're going to have to pretend, where was I? 46.90, thereabouts. One, two, three. Okay, this is a little bit of a sloppy 4-arrow consolidation. Typically, when we see a 4-arrow consolidation, we'd like to see, if the market has been downtrending like this, we'd like to see the consolidation pattern either go sideways or even into a bear flag type situation where it retraces like this. This one, it is sort of sideways, but it's a little bit of a sloppy sideways. Okay, let's see if I can get an order in here before it runs. So this now, the 4-arrow consolidation, I'm a little bit late on the signal there. I wanted to take it a little bit closer to that hash mark. The reason being, the earlier I get in, the earlier I can get out. I don't have to make the market work quite as hard. So these lows here that we're at, I think these are pretty significant. 46.74, that 46.73, that's yesterday's low, isn't it? The problem with this trade will be covering the stop, trying to determine where the best place to leave that stop is. Okay, so we've hit the break-even trigger, and we hit our profit objective. Whew. That one was a little tricky also. And go figure, today I'm going all in, all out, and the market is hitting my targets. The other day when I'm trying to run a trade, the market gave me no follow-through. Stupid market. And it looks like our Falcon trade here worked out as well. So the late filter entry signal on the Falcon. So overall, we're having a pretty decent session so far. It's nice when the market is moving a little bit. So with the late filter entry, what we're looking for is the filter to go out of sync, come back into sync. The trend line never changes color, and then you produce a signal. This is a very high probability trade. If you are following the Falcon, that is one that, like the first micro macro cross and the hawk, a signal that I take almost without exception. Jim says, wow, 100 points from where I shorted and I got 24. Says, crap. Yeah, we've all been there, Jim. Like I said yesterday, I tried to run a few trades, run a few contracts, nada. Hit my profit, or what should have been my profit target, reversed, stopped me out of break even. Today, yeah, we're getting some big follow through. Got a nice run up, got a good run down. Oh, sorry, crude oil. What am I? It's looking similar to the NQ. Or the YM. Let's get the YM up here. There we go. So we had a little run up out of the open. So very active day. Oh, and you'll have to excuse the tick size here. I'll get it right yet. Just bear with me. There we go. Okay, so the open, a run up, the market folds over on itself. We produce a soft edge sell. And again, like the rule of three, like these other signals, the soft edge sell must be preceded by a test of the extreme. Without that failure, it's a gamble. Now, I suppose you got a 50-50 chance of being right, but with that test of the extreme, it really, really improves your odds. You see, you had the test of the extreme down here. You had the soft edge buy, very good follow through. Test of the extreme, soft edge sell, and exceptional follow through. This one, these two are textbook. And Jim would have been monitoring the cloud to cloud width and probably recognized the market was severely overbought. But yeah, just a monster move lower, right back to, well, this morning's or the overnight lows, it looks like. Getting some more buying pressure coming in now. Oh, Jim's asking what size was that cloud? Hold on here, Jim. At the widest point, it looks like it spanned from, we'll say, 178 to 178.40, so about 40 ticks. But don't forget, my settings are a little slower than yours. I'm running an 8 and 10 cloud. All right, we'll put that back on the shelf. Hmm. So a green bar sell, oops, sorry. A green bar sell with a pending test of the extreme. And again, with the green bar sell, you can set up to take the counter trend version of it. Because it is counter trend, you may have to risk below the swing low. Don't ignore the fact that this market is in a downtrend today. But we'll see what happens. And with the with the green bar sell, remember, you can always wait for the first micro macro cross signal, which is what's developing right here. And this is very much just an all-in, all-out type scenario. As I said, the market in a big downtrend. For every tick it goes higher, you're going to see the sellers try to squash it. Oh, good buying pressure though. Come on, get up there. See if we can't retrace here to the hard edge and what looks like the low of the morning, around 46.77. All right, hit our break even. Come on, just a couple ticks. Come on. Oh, they're kissing it. Oh, whew. Whew. That was hard work. Well, I think we're 4 for 4 this morning. Mark asked a question. Speaking of the clouds, how do you know what setting is on the current Eagle cloud? The one that comes with the Eagle, so you know where to start playing with the add-ons. The Eagle cloud would be set at the same tick value as your bar size. So it would be set at a 12 tick cloud. It's really only the Raptor that allows you to make some modifications. The other tools, everything is pretty much locked, as you know. Okay, back into the hard edge now. So we've had a big move up and a big move down. I would almost venture a guess I was going to say, I would almost venture a guess that we've seen the move of the day. I would almost say that. Billy is in the room this morning. Good morning, Billy. Billy sent me an email yesterday with a great question, and this is going to save me a whole lot of typing because I can answer his question now. Billy asked me about when he should take profit. How do you know when you should take profit and not end up losing all your open profit? And I know Billy is a Raptor trader, so we're going to focus here on the Raptor this morning. My rule of thumb and my personal recommendation to you is that the smaller your trading account, the more you should be an all-in, all-out trader. Now, if you're the type of person who, or maybe we'll do this here on the Falcon instead, so I can use the trade manager. If you're the kind of person who takes a trade like this, and the market comes down, and you take your $100 profit, and then the market does one of these, and you get real upset with yourself, then you're going to have to try to leave a runner in play. But the problem with leaving a runner in play is what we experienced yesterday, where if you take a trade, I suppose this is, well, here we'll use this example here. You take a trade like this, the market, no, did it get up there? No, okay, sorry, let me find a better example. You take a trade like this, the market goes up, hits your profit objective, and doesn't really go that much further, and you end up perhaps getting stopped out at break even or somewhere down here where you could have had a potential $200 profit. You end up walking away with $10 or $20 or $30. That's the problem with trying to have a runner in play, right? So there's the big debate. Do we go all in, all out, or do we try to swing for the fences, have a runner in play, and capitalize on the bigger move? Now, I suppose the best answer is to do both. Do some profit taking, get your stops to break even. If the market happens to go further, fantastic. If it doesn't, well, at least you take some profit with you. I think it's very important that you bank some profit. And quite honestly, at the end of the day, even though the market will occasionally, give me a signal like this, hit my profit objective, I get $100, and then it goes, I could have easily had $200 or $300 here. It goes on without me. At the end of the day, I will usually still fare better by going all in, all out over the, over the course of time, over the course of the month. By actually banking the profit when I have it, at the end of the day, I'll tend to do a little bit better. And there's something very gratifying about taking profit. Now, I worked with a fellow who was the type of person who could not stand to have the market go on without him. So, he was always going to be having a runner in play. And so the problem with having a runner in play, especially if you're running a small account and you're forced to maybe trade a single contract, is how do you know what to do with this? Like right now, we've got about $100 in open profit. Had we taken this signal right here, and I know you're a Raptor trader, but there will be a similar signal on the Raptor. So now you've got $100 in open profit. What are you going to do? You only have a single contract, right? If you were at least trading 2 contracts or 3 contracts, you could say, well, okay, I'll take $100. I'll roll the stops to break even. If it goes up, another $100 or $200, hooray for me. If it reverses on me, hits me at break even, well, at least I took $100. But the part that you're forgetting is that you're there's always that risk component, right? It's such a fine line. I shared this story before, and I don't think you were in the room yet, so I'll share it again. A few months back, I had the opportunity to meet a fellow day trader who actually doesn't live all that far from me. And I happened to be at this person's house, and they've got a beautiful property. And I could tell from the paraphernalia on the desk that they were involved in trading. So I got talking to them. And of course, as traders, you're always interested in what the other is doing. And long story short, this fellow was trading literally by the seat of his pants. He was trading by how he felt. He looked at the chart, he got a certain feeling, and then he would buy or sell or stay out accordingly. Now, he even said to me afterwards, he said, I don't know why I shared that with you. I never tell anybody that. Because I suppose everybody thinks, you're kind of a weirdo. But this person had, a beautiful waterfront property worth at least $1 million. They were doing a major renovation on the house to the tune of $100,000, which they were paying for in cash. They had a brand new, what's that big suburban type Chev? No, it was a Ford Explorer. Same type thing in the driveway. Now, he admitted he got a very good deal on it. But I guess what I'm trying to say is this person was doing all right as a day trader. So if this person was trading by how they felt about a chart, how is it that they could make money? Well, I'll tell you, Billy, and everybody else, this person's money skills were second to none. I have never, ever encountered a person who had such discipline and such money management sense, and they had never been trained. And this person, so they're a natural, but this person obviously because they were fairly successful, had people coming to them saying, will you trade my money for me? And he had this little test that he would tell people. And he would ask, okay, well, if we're in a trade and we're up $50, do you want me to take the $50? Or if there's a potential we can make $200, do you want me to hold out for the $200? Now, I've already kind of set the scenario here, so you probably can guess which way the test went. But think honestly, if you knew nothing about everything that I've just mentioned to you, if I came to you and said, okay, Billy, if we're up $50, do you want me to take the $50? Or if there's a chance we can make $200, do you want me to hold out for the $200? What would you say? Well, you would probably say, if you're like most people, you would probably say, hold out for the $200. Wrong answer. This person was grabbing $50 trades left, right, and center, and he told me, and I haven't spoken to him since, but he told me at the time it was like 2 months since he had a losing trade. Well, because to take $50 out of the market here and there is not that difficult, right? Because you're not anticipating a huge move. But those little $50 trades, they add up. And many of you will know this little scenario that I've mentioned in the past as well. But trading is not about frequency. Trading is about finding a high probability signal and capitalizing on it. And the better you can capitalize on it, the more money you will make. So let's take this $50 signal example. If you take 2 trades a day for $50 each, and you can do this day in and day out, at the end of the year, you will make $20,000 trading a single contract. Okay, $20,000 is certainly not enough to live on, but it's not chump change either. Right? An extra 20 grand a year for most people would significantly improve their lifestyle. Buy them a nice vacation, buy some niceties for the family, fix up the house a little bit, certainly do better than your 401k or here in Canada we have RSPs. You certainly would be outperforming the market. Now let's say you kept that $20,000 in your trading account, so now you're able to trade 2 contracts. 2 $50 trades a day. Wrap your head around that for a moment because most people don't get this. 2 $50 trades a day. At 2 contracts, now you're making 40 grand a year. 3 contracts, 60 grand a year. 5 contracts, $100,000 a year. Okay, now you're starting to get into, I don't have to go to work anymore income. 25 contracts, you will make $500,000 a year. 100 contracts, you will make $5 million a year. And if these numbers sound unreasonable to you, they are not at all unreasonable. Don't think for a moment there are not people. Now, if you're trading 100 contracts, you're not going to be able to trade the NQ. You're going to have to go to the E-mini or the big Dow. But that would be a very nice problem to have, that your orders cause the market to slip, or you have to scale into your orders because your positions are too large. You know what, Al? Al says his stops must be incredibly tight on his trades. No, he trades his stops by his feeling also. I know, it's hard to believe, but it's true. And like I said, his only saving grace is his money management. It just shows you how important money management is. As traders, we get so hung up on the signal, right? The signal is sexy. And this, don't get me wrong, the signal is important. Entering at the right time is important. Here's a red bar buy signal. We're at the bottom end of the trading range. We had a macro pullback, developed into a red bar buy. No real test of the extreme. This is the right time to buy. You want to get in there. You want to go, high probability trade. Boom, boom, boom. Okay, I got my profit. Thank you very much. I can breathe easy again. And so what? So the market goes a little bit further. But no, he trades stocks, first of all. And a lot of times he won't have an active stop. He'll just monitor he calls himself a day trader, but really he's an end of day trader. He'll calls himself a day trader because he looks at the charts during the day. But no, he doesn't run a very tight stop. In fact, I don't think he has a stop in it at all. But he's very astute in that he recognizes that the market has rhythm. That was the other thing that kind of stood out when I was talking to him. A lot of traders don't get this, and you would think it would be so, obvious that The market has rhythm. The market goes up, the market goes down, the market goes up, the market goes down. Now, this is never to say he's never trading in the red, but he knows if it's in the red for a little while, there's going to be another uptick. And when the market does make that other uptick and he's in a profitable position and his gut tells him it's the time, he'll take profit. And then he'll actually ignore the market. He won't look at it again and say, oh man, why didn't I stay in there a little bit longer? I could have made, another $200. But he'll have $1,000 or $2,000 days trading this way. But it's volume. It's volume, folks. It's not frequency. And he only follows 7 markets, most of which I never heard of. I think the biggest market he follows is Visa. And he chose those by his gut also, in case you're wondering. So my advice is all in, all out is a good way to go. If you do have the ability, the account size to have a runner in play, by all means, use a runner. Never risk more than you can afford to lose, and really the rest, let your pocketbook be your guide. So for instance, let's say we did take this red bar buy down here, and let's say we went 50-50 on our trade. So I've got 3 contracts. I banked $50 on my first target. Now I've got a runner in on 2 contracts. So 50, 100, 150. We're about $200 in open profit. And that's significant for a move in the hawk. So if I'm up $200, I'm going to probably move to a more aggressive stop strategy. Maybe something like the parabolics. Maybe even the bar high low, something that's going to protect a lot of that open profit. Because if I'm up $200, I certainly don't want the market to peel against me, lose $150 or $200, walk away at break even on the other 2 contracts. My friend Tom Loge always had a neat way of doing things. Also, he would try to maintain his risk-reward ratio. Now, those of you who have been in the room anytime at all know I'm not a big fan of risk-reward ratios. But what Tom would do is he would look at a risk-reward and he would say, all right, where's my resistance? Okay, so he would look at it and he would say, okay, there's probably resistance going to be probably right around there somewhere, right? As we get back to these lows. All right, close enough. Oh, yeah, okay. Let's do it like this. So here we have a red bar buy, and Tom would say, okay, I'll set it up like this, and I'll go like that. So let's go to manual mode here for a second. It'll make more sense. You gotta work with me here. Okay. So Tom would say, shoot, I gotta do this again. There we go. It's a little better. Tom would say, okay, I'm running approximately a 2-to-1 reward to risk ratio. Right? I'm looking to make about twice as much as I have at risk. So the market goes up. Now, your risk-reward ratio is getting a little bit lopsided, isn't it? How is that, you say? Well, you've got about $100 in open profit, so you're actually risking about $240, $250 to your stop, but you only have about $100 left in open profit. Do you see that? Where we are right now, we have about $100 open profit, but our stop is down here. So that effectively makes our risk about $240 and only about $100 in open profit left. So Tom would say, well, that's lopsided. So what I'm going to do is I'm going to roll my stop right over here so that relative to where I am now, I've got $100 in open profit and I've only got about $50 in open risk. And then if he was lucky, the market would keep going higher. And now he would say, well, relative to where my stop is now, I've got another $100 in open profit. So I'm risking $150 essentially, right? Because my risk from here to here was about 50. But I've only got about $50 in profit left. So I had better bring my stop in tighter still. Now, Tom, I don't think would ever bring it to the point where he would have like $25 in open risk relative to the $50 that he thought was remaining, but he would start to get more aggressive with the stop, and that would be his logic. And you could see in this instance, it would have worked out seamlessly for him, and he would continue to do the same thing. So now that the market hit this profit objective, he would look back in his chart again and he would say, okay, where are we likely to go from here? Oh, it might go up to here. So that's now his profit objective, and he's managing it the same way. He would say, okay, I've got I've got about $150 to go there. I don't want to have more than $75 at risk. $75 or $100 at risk, and that's what he would do. So there's another little wrinkle in the money management scenario. It's a little bit more complicated, but it's not a bad way to look at it either. That way you're always controlling how much risk you have in play. In this particular one, yeah, the market's just running all over the place today. My goodness, it's really doing well. So I hope that makes sense. It is a complicated subject, to be sure. But recognize too that days like we're seeing today, you'll probably get 2, maybe 3 days a month like that. The rest of the time, you're probably going to be better off just taking your profit when you have it. Even these days where the market takes off and makes these big moves higher and lower, it's not like you don't get a second chance, right? We got the cloud crossover here. Let's say you took that one shortly after the open. Then we get a little bit of a consolidation here, a soft edge bounce. Let's say you missed that one. You still get the soft edge buy. Let's say you missed that one. You still get the cloud crossover here or here, depending which one you took. Either way, the results are still good. You should never ever beat yourself up for leaving a trade early. You can beat yourself up for, doing something stupid, taking a trade that you knew you shouldn't have taken. Go ahead, beat yourself up for that, but don't beat yourself up for taking profit early. Yeah, good point. I like what Jim says here. Ask yourself a question. How do you feel if you break even compared to losing? For those we've all been in losing trades. How often do we beg the market just to get us back to break even so we can get out and not lose any money? So true. Yeah, like Jim says, I feel like I won if I can get out at break even. And if you win also, like Jim says, then I'm ahead of the curve. Absolutely. I agree with that 100%. Yeah, Jim says I have a huge amount of wins. A lot of them are break even. You should consider a break even trade a winner. It's certainly not a loser. And don't forget what we're trying to do here is very difficult. We're trying to predict what the market will do in the future. And, to determine how far it will go, well, that's also very difficult. The support and resistance lines are very helpful in that respect. And now that we're back here to the primary resistance, I would fully anticipate some sort of reaction. Yeah, see, Jim makes a great point here. He says, um, those break-even trades, he says, that's why my account is growing. And he adds, you can always get back into the market. Sometimes you need to reset the way you're seeing the market, so break-even is the answer. Yeah, I know. Al says, look, we've retraced the entire move lower, and we certainly have. What a crazy morning. So the market opens, runs up, hits 47.05, falls off, looks like, the market's going to come unglued, and then we're right back up here to 47.05 again. Just a crazy day. I hate shorting the NQ. Every time I short them, they turn around and they smoke me. Yeah, and yet the advanced decline is very, very bearish, Jim says. About 750 on the buy and 2200 on the sell. That is a very bearish number. Huh. Good bookkeeping here on Jim's part. He says most of his large losses are when he's shorting. Oh, speaking of bookkeeping, for those of you who have not heard my little, well, I won't call it a rant, my sermon on keeping a journal. If you're not currently keeping a journal, do yourself a favor, get a notebook, keep a journal. And we're talking about a trading journal. You don't have to write down your feelings or, what happened to you today, unless you want to. Journaling's actually a great habit to have. But as far as your trading goes, um, you need to keep a trading journal. Write down not only your trade parameters, but more importantly, why you took the trade. You should have, ideally, you should have two reasons for taking a trade. If you can come up with two reasons for taking a trade, like for instance here, we're looking at the Raptor, and let's say you're considering this cloud crossover. Well, the cloud crossover is one reason for taking the trade. You could say, well, maybe we've had a test of the extreme. It looks like we're making higher swing highs. And, there you go. You had yourself a nice little trade. But what's important about keeping a journal is that you're going to learn a lot about the signals and you're going to learn a lot about yourself. And I don't mean, the touchy-feely kind of stuff, but things that work for you and things that don't work for you. It's going to go a long way to giving you confidence to take your signals. I can tell you that 99.9% of losing traders never kept a trading journal. And I can tell you that 90% of winning traders do keep a trading journal. It's not hard to do, and I guarantee you that in 2 weeks or less, you will start to see patterns emerge in your trading, either good or bad. But, even the bad stuff, being able to identify it, huge, huge difference. You'll be able to do something about it. Yeah, Mark says, so much for the move of the day. Yeah, I thought so too, Mark. I thought that's going to be it right there. We'll see the market waffle a little bit, maybe give us a hard edge bounce, another chance to test these lows. Nope. There she goes. Well, we are in trend mode for about another 15 minutes, after which we're going to move into swing mode. So it is possible we're going to continue to see some pretty big moves here this morning. We're right back here at some pretty significant resistance, though. Like I say, we're sitting on the primary resistance line here around 47.04, 47.05, near the high of the morning also, which coincides with that, coincidentally. Yeah, no doubt. Al, you're right. Al says this action shows the debate on the next Fed move due to the unexpectedly strong jobs numbers today. Yes, trying to second guess the Fed, everybody's favorite game. I hate all this talk about negative interest rates. I've never heard of anything so stupid. Sorry, I couldn't think of a milder word to use, but it's stupid. And I'm no economist. You mean the bank's going to pay me to borrow money? Yeah, fat chance of that, eh? Just watching the Geiger counter here now that we're back at these resistance level and these highs. You can see it's fairly evenly balanced. If we saw the dial swing hard over here to the sell side, we might anticipate the resistance to hold. But so far, it's, nobody's really flexing their muscles. They're just back and forth there. I got a little bit of a buying block here. Doesn't look like the sellers absorbed it much, though. It's kind of lopsided. There we go. The dial's a little hard over now. No, it wasn't sustained. What you want to see if you're going to follow the Geiger counter this way is you really want to see that wheel move over and then stay there. Yeah, like this. See how it's buried there? Lets up a little bit, but come on back. Come on back. Give her that throttle. There you go. Oop. If it stays, there we go. If we spend more time hard over like that, we're going to see the market move a little bit lower. Yeah, notice what happens when we get back to this support. You see we're getting a macro pullback signal here on the hawk. And did you notice the Geiger counter went hard over to the right? Yeah, the sellers are going to take it. See here? Oh, look at this. They're just fighting it out big time. Kind of like a boxing match. Yeah, there they go. So if you're going to follow the Geiger counter this way, you're not usually going to capture prolonged moves, but it'll give you a short-term bias anyways. So if you're looking, at your scalping tools or even the Raptor, you're trying to pick up a couple of ticks here and there. If you see the wheel go hard over one way or the other and stay there, see here was that little selling block. The buyers absorbed most of it, but we still got a little bit of a downtick. And now the buyers are getting stronger again, so we may see some of that support develop. The macro pullback, by the way, has moved into yellow bars, so that's negated that signal. We did get an early trend change signal here on the Falcon. Gold definitely stuck sideways now since the big move lower. Crude oil drifting a little bit lower, but also fairly sideways for the session. It made its move at the top of the hour and fell off a little bit. We'll take a look at that. So right here, a little bit of a decline. Big move came, well, prior to the open, really. See how the Geiger counter hard over now? See how they're chewing through those orders? You're almost guaranteed to see the market move a little bit lower now. Oh, the buyers are doing their part. Come on, sellers. Let's get that wheel over. There you go. Stay there. So the Geiger counter giving you a little bit of an early clue. Like I said, it won't ever really tell you on the really big moves. Like the Geiger counter would not have told you that this move here was going to be as sustained as it was, but it would have told you there was a whole lot of buying going on there. You can bet that wheel was hard over to the buy side. And here we are again. So hard over on the sell side. Oh, there we go. You want to see it move over and stay there. That will tell you that in this case, the sellers have control. And of course, if the opposite happens, see how it's, ooh, if it stays hard over on the buy side, then the buyers, of course, getting very strong. All right, you guys, it's the top of the hour. We've seen a couple major swings here. I think we're going to button up shop. If I had to guess, you know, it's obvious we're sandwiched between two strong support and resistance levels, 47.05, 47.75. I would favor a move lower, and that's based mostly on the early move in this market. But as Al pointed out, we're right back to where we began. So if anything, you could say the current move is a little bit more bullish. But when in doubt, short. It's like in football, when in doubt, punt, right? So that's the trading version of a punt. All right, you guys, we'll catch you Monday. Hope you have a wonderful weekend. We'll talk to you soon. Bye for now.